from.
Well,
Yeah, I'm just gonna put on record. So
here's the thing.
I was
When
gonna
you
do it.
start looking at getting your money and getting loans and stuff from here on out, start looking at 14%
Yeah.
interest. And then in about another 3 or 4 months, take it to 18. Now, it may not cost you that much, but I'm telling you, the only way that you're going to be able to make this work is stay ahead of it and make the numbers work in that regard, because otherwise you're going to get caught in this thing, because it's going to get that wild and woolly really when it gets down to the end of the line. And as far as materials are concerned, okay, Shanghai's opened up again. Canada and the actual lumber is starting to moderate a little bit, but everything else is going to be herky-jerky. Within 3 months, they'll probably start getting supplies coming in from plumbing parts and stuff like that relatively regularly. And if I were you, if you can get a warehouse somewhere, I just stock up and call it good.
And that's kind of what we've done. And that's kind of what we've done. We've purchased a couple of those train carts. You know what they are? Those Connex containers, and filled those up with flooring and cabinets and you know, a couple of our properties, because you're right, you just don't know what the supply chain is going to do and where we're going to be at in 9 months to a year. I mean, it could get really bad.
Well, what's going to end up happening here is there's going to be a bull run on commodities for the next 10 years.
Yeah.
So when you look at the way that is, it means anything that's tangible assets, that's going to be going up through the roof. Now you're talking copper, plastics, all these different things that you're going to need to put in there. Start going back to historical values, add another 40% to the cost of that, because that's probably what's going to happen here. And then trying to get your money out, instead of doing like a 7-year plan, you might have to go 12.
Yeah.
And there's nothing against that. There's nothing wrong with that, because eventually it's going to lay out. The government, however they do this, they're going to keep pumping money in. So you're going to need to make sure you've got some Section 8. Take it while you can and hang on to it, because that's going to be your stability as far as making the payments are concerned. Other than that, you got to be careful on that. Labor, I don't think there's going to be a shortage in labor, but you might want to go ahead and put some signs out and try to train people to do it your way. I mean, you know, take possession of your labor if you can. That's basically what these guys are doing here with the tree company. And it's the only way you're going to make it through this thing, because otherwise, I mean, the distortions are going to be out. I mean, you're going to be out of sight. So if you can do that and then review it every 6 months.
Yeah, absolutely. Well, our business plan, you know, buy these properties, they're extreme value adds, and we go after them. We have a team of 6 acquisition specialists that work for us, and they do nothing but seek out off-market deals. They'll call apartment owners directly. They'll make relationships with brokers in certain markets and try to get those before they go out onto the open market. And you know, it's all about capturing value. But that's how all of our properties we purchased them, you know, basically at you know, between 50 and 65% of the stabilized value. You know, is going after it that real aggressively and trying to build those relationships so that when somebody has something, an owner is thinking about selling, that we're the person that they call. And it all starts there, you know, with real estate is on the, you don't buy at the right price, everything else is for naught. You have to get it at the right price. And then setting up the financing and the CapEx and all of that.
There's some good resource now, because I know we've been talking about, you know, on our end, promoting Privy as a single family, but I was just on Benson's Privy YouTube last night, and they are now getting into multifamily, and they have multifamily. But just an example on a single family, he showed us last night a house in Indianapolis. The purchase price was $100,000. He doesn't have the information on what the rehab costs were, but the house sold for $470,000. So you're talking 21% ARV, and they're all day long. So we're going to be doing a lot of stuff with Privy, but now he's got into multifamily.
I've been pushing real hard to hook up him and Angel Moreno to put together those large scale, you know, commercial 500-600 door complex deals, because that would be just a gold mine, because you get the information fresh off the press with the way he does it. You can't miss with this thing. And if he can get that done, we're all sitting pretty right now, because
At that
you
point,
don't even have to put any money into it. You just flip it over some of the people he has.
yeah,
He's getting crazy with it.
and I mean, the only thing we'll be short on is self-storage and assisted living, but
Yeah.
they can get into a single family, or they can get into multifamily now and start, getting deals where they may not even have to syndicate at some point. We can get them into lending, some different lenders and stuff like that. So speaking of that, how's your lending business going?
It's going great. It's we're concentrating more right now on preferred equity. We've got a heck of a preferred equity demand, I guess you could say, for we get 3 or 4 calls a day for that. But on the lending side, this is going to be a wild ride, because 6 months ago we were looking at bridge rates in the threes, 375 over SOFR or 350 over SOFR, and those days are about gone. We send out quotes right now, and guys on our team are surprised 7%, 8%.
And I'm telling you, 14 is going to be here probably about the time the end of the year, first next year gets here. So you just need to go ahead and plan that.
Yeah.
And I'm just telling people to do single family.
Act like you're already there at 14.
Yeah.
Use Privy, because that's going to be your game changer. Of these new rates are going to be high enough that now you can, the money will probably stay the same. If somebody uses Privy, they can go in and set parameters and all that stuff, and said, yeah, it's 10,000 a month. They get 10,000, basically in their emails every morning. They'll wake up and they have new properties populating their emails. So
right,
looking at that as a tool. And then, like I said,
I think I've lost you.
There we go. You did lose him. I lost him too.
Okay.
It's another thing you might want to consider. The Fed has been doing all the stuff for Fannie and Freddie. They've been buying all the mortgage notes. Okay. We were talking about this a while back, and they're getting ready to sell a lot of that. They're not going to be able to hold all this. So there might be an opportunity for you to find some mortgage-backed securities through the Fed on multifamily. It'd be something that we need to look into. And,
right.
It might be, I don't know how they're going to do this, but it may end up being bank by bank. There's 12 of them in the United States, and you may have to make, I'm going to check with the ones here in Kansas City and find out what the story is going to be there, because if we can find a way of getting those mortgage notes, that's going to make this a lot easier to do the multifamily, because you're going to know exactly what you got going on right there at the get-go, probably at the 3% or below rates.
Right.
Because the Fed bought them,
Right.
So consider that. And right now be the time to look into it, because they'll probably start cutting those in the next 3 or 4 months.
Yeah, we're and on the financing side as well, I guess just about every apartment syndicator, their business plan includes, going from bridge over to agency, or maybe going straight into agency, raising the money for CapEx, and then just holding it. But we're looking more and more now at a very long-term play on the CMBS loans. Once we reach that 90% stabilization, because that's what the requirement is. You got to already be at 90% stabilization to get a CMBS. But we're looking right now going forward at that 10-year, 12-year, and that's mainly because our investors now are demanding a higher hold time. And
that's where the security is.
Yes.
Because once you get through this, whatever this downturn thing is, actually, I think the economy is going to start all over again. We have a little hitch in that giddy up, by the way,
Right.
But the whole point of the matter is, if you go out 12, 14 years, you're riding the whole thing out.
Yeah.
And by the time you come out on the other end, you'll be in a position where you can ride whatever economy shows up. And I'm thinking we're probably going to have a lot to do with saying what that's going to look like, to be quite frank with you, because we're the only people that really saw this coming. And we're prepared for that, by the way. So if we look at it, 12, 14-year terms. And then if it comes out sooner, you can get out sooner if you want to, but you're not going to hurt yourself. And your money's not going to be upset when you're doing this too, because everybody's trying to bail into tangible assets. They're a little late to the party. People are getting panicky. I don't know if you've noticed that or not, but and you got to be careful about those people too, because they're desperate. They've never seen anything like this. They don't know how it works, and they don't know what it's like to be without money. And it can get kind of wicked, even though they've had a lot of it for a long time. This is a whole nother animal for them. So you got to have to be careful of that too. It's not just because you're the guy with the actual stick. You've got the carrot and the stick, whereas everybody else is just trying to find a carrot.
Right.
Even what I'm saying too is a lot of people now, still because of COVID, they're doing still so much virtual education and stuff now. We're not seeing the live events, so people aren't getting sucked into this, hey, flip houses using none of your own money stuff anymore. Yeah. And until that starts picking up, I think we're able to help a lot more people get into it and understand. It's so frustrating for me doing private, doing the brokering and stuff like that, because Facebook. But I think we're seeing that too a lot. There's a lot more people are now coming around to, they don't have all the the internet flip star, the TV flipping stars.
Right.
And I think that's a huge advantage now to helping people get into the real estate industry, because I think there's so much value. Like I said, I'm telling people right now, if they're not using Privy and they're in single family, they're going to fail, because it sets them up for a perfect, to be able to it's a workaround around these interest rates as they go up to 10%.
Right.
And it's live.
Yeah,
that's great. I'm gonna have to check that out. And
yeah, we'll make sure. I'll let you know when Benson does his next one. He does a couple of them a week on YouTube, and then I think he has a couple different packages. We're going to be supplying him with. I got those, 1,341 lender elite lender database. I'm going to be supplying that to him, so he's going to be able to put that out as an incentive to his people and all that stuff. And obviously, our YouTube channel is now going to be big. I'm just putting so much stuff on there of what I've done in the past, because it's just easier to build an audience that way, and then you don't have to get all these people. They can also just go and watch it anytime. We don't have to worry about hey, we got a class at Thursday night, and we did
right.
before. That worked out. We had 30-something people in the two classes, but it's that way we can just put the content out there, and people can tune in and they can learn, and they can make connections. Like they can connect, with all of you guys too. Whether they're looking for money for to borrow money or investment deals or whatever opportunities. So Kevin and I have a pretty good plan now.
Oh, great. That's great. So did y'all want to see our slide deck?
Yeah, feel free to share slides. I made you.
Okay.
Yeah. You're co-host, so you could throw that in there.
All right, let's see here.
If you're able to find it, should be able to share. Okay.
Yeah. So that's the name of our company is VFR Capital Investments. We're a real estate acquisitions company primarily. We source off-market apartment complexes. Right now, we're going to be moving into self-storage, boat and RV storage, some other asset classes. I think we're going to probably start taking a break from multifamily, or at least put it on the back burner and only be very, very selective. But VFR Capital Investments is made up of veterans and first responders. My partner, Wesley, you see on the left-hand side, right beside my wife, Jana. Down at the bottom, I guess let's just start there. There's my wife, Jana, my partner, Wesley, who's a Marine Corps veteran. Then there's me. I'm the first responder of the group, and then Epler to his right. So veterans and first responders. We think that's important because veterans and first responders pride themselves on, getting things done, mission, integrity, character, team building. And those are the kind of the core values that we're built on. And, we feel that's important to ourselves, to our investors, and to all the stakeholders in the deals that we structure, is that we display those characteristics and that we actually live that life. Strategic financing is placed on here because our sister company, Centroid Lending. Centroid Lending is it's a vertically integrated sister company of VFR Capital Investments. As we've been building VFR, we've noticed that we are very good at sourcing debt and equity, as well as raising equity. And so we've developed a lot of relationships with family offices that can supply us with preferred equity to kind of bridge that equity gap needed and get us or get a client at 85 to 90% leverage. And so we've got those relationships that we've built out over the last couple of years through VFR.
That's awesome.
This is just kind of a bio for us. This is our team, our acquisitions team. These are the guys that really make the magic happen. And like I said earlier, these guys make thousands of phone calls a week, thousands of emails a week. They're reaching out to private owners, ownership groups. They're reaching out to brokers across the country. Relationship with the commercial broker or the individual owner themselves, and then they bring back the deals to us. A lot of people don't realize this in the apartment business, but you can't just, really only 1 out of every 100 deals are worth looking at.
Right.
And so you really have to be picky about what you go for, because every owner out there thinks that his property old, and then when we start doing the due diligence on them and the numbers, the story, that's when everything, when the truth becomes known. And so it takes a lot of deal flow to get good deals for your investors. And so this is what our team does continuously. They're doing it right now as we speak, and we all work virtually on the Centroid side and on the VFR side. We've got 14 brokers on the Centroid side that do nothing but reach out to apartment syndicators and syndicators of self-storage all across the country. And so we've got 2 teams at play, but we all work virtually. We all run off of Zoom, and VFR and Centroid are kind of the perfect pair of companies to work together, because not only can we find a team over on the Centroid side that just needs a capital partner. Well, VFR is very much set up to either go out and help them raise the capital or refer a capital partner to them that can bring the capital themselves. Or maybe they need net worth and liquidity, or construction manager and asset manager. Then, my wife Jana would step in and could fill that gap for them. And so it's kind of the best of both worlds, having Centroid and VFR. They're both complement each other very well. This is our portfolio. We've got 272 units in Park Hills, Missouri. We've got 248 units in Fort Worth, Texas, 97 in Denton. We've got 125 in Irving and 120 in Lubbock, Texas. And so this is over the past almost 2 years. We're a little shy of 2 years, but 862 units, $70 million in assets under management. Although I think that's probably closer to 75 million in assets under management. But I think our marketing person was being a little conservative with that. But it takes a lot to be able to make those connections and build that network out, to be able to put the type of equity together, to be able to take down some of these larger properties. And that's kind of where we spend a great amount of our time, is building those relationships. As y'all know, you can't just go out and sign on a loan for $40 million. You got to have the net worth, the liquidity, everything to go with it to be able to do that. And we got to build a team to put that together to be able to do that. So that's we're constantly building out those relationships to put these deals together.
Yeah, that's a good deal. It looks like you've done a lot. Since last
But that's it in a nutshell. I mean, we're always out there. We're always looking for deals. We're always willing to entertain bringing on another team to a deal. You know, maybe you've got an experience that we need to fill a key position, you know,
Well, I was just going to ask you, do you guys do any short-term stuff? 10 million bucks, 6 months, 20% return?
No, but really the majority of our portfolio is 6 to 7 year hold. And so that's kind of the minimum. The capital is going to be tied up for, 6 to 7 years. It's pretty long term. We really look for deals that we can return a 2x return in right around 5 years, 15 to 18% IRR, and 9% right around there. Cash on cash that's kind of our sweet spot. Now, right now, they're very, very hard to find, and so that's kind of where we're transition very slowly, kind of outside of multifamily, and or at least put multifamily on the back burner as far as the acquisitions go for a little while, and just hold what we have. But yeah, it's I would like to get into short-term lending and transactional funding, because we have a lot of clients that are looking for transactional funding, and it's very short term.
Well, that's why I was bringing this up, because I've run into an opportunity where basically you need $10 million and it's guaranteed. It's basically insured, by the way.
Yeah.
And the offer was 20% for 60 out term, or you can be is 60 to 90 day term is all I was looking for.
Right.
And getting a 20% return. So basically you'd be getting $2 million for the use of your money for 3 months.
Right.
And it's insured.
Huh.
If you guys have anything that might fit that bill, or know somebody that can do that.
Yeah, I mean, we have
now sitting here on the fire.
Right.
We'll deep dive on it on a deep dive call where we can talk about it. It's a good situation. I mean, it's actually pretty legit. So we've talked about that in the past, but I mean, a lot of the people still are looking for single family and stuff to break into the industry, and that's still what we're
right.
And that's what I'm trying to focus on. I'm trying to do a lot of that right now, is trying to help these guys out with just getting that first deal. So I'm having list and all that, just your first deal, where basically you're going to be able to, here's how you get your business entity, here's how you set up your, I recommend, obviously I like Wyoming, everybody knows that, knows me, but how to do the borrower's checklist, and I use the most stringent borrower's checklist I have is to prepare two sets, one folder, one documents folder of all your entity documents, and get them straight, and then it makes it a lot easier. But going through, here's how to talk to a private money broker, here's how to talk to the lender, here's how to, I always recommend people have a relationship with like a private money broker or before they put a property under contract.
Yeah.
Because I think that's key. So that way the broker, like me, when I do it, when I broker, I'd like to work with somebody to help them write the offer that I know is COGO, or whoever's going to finance it is going to approve it, because it's going to be other parameters. Now, obviously, when you keep going back to privy, it's a lot different when they can take a deal that, they buy the deal for 100,000, maybe put 100,000 into it, and there's 270 profit,
Right.
Probably made $250,000 profit. Those deals are out.
Well, guys, I'm going to have to cut off. We're getting ready to finish this thing up.
Yeah. So, Robert, where can people contact you at?
You can contact me at robert@VFRcapitalinvestments.com.
Okay.
We have a website, VFRcapitalinvestments.com. You can contact me on Facebook. We have a Facebook page. Centroid Lending has a Facebook page as well. So feel free to contact us.
We'll put those links. I'll put those links into the description.
All right.
And then we'll,
I'll try to get back with you this evening on that and give you some more details as far as what that project looks like.
Absolutely.
You think you could swing?
Yeah, absolutely.
All right. Cool. Well, I appreciate your time, Robert, and look forward to doing more discussions like we used to.
Hey, absolutely. I do too. Thanks for Thanks for having me
I
on.
think actually you're our first like interview type doing the YouTube channel. So we're trying to get, we're going to probably have about 8 to 10 more in the next couple weeks and just
Nice.
start building it. And I want to basically go where people like, share, and subscribe, and they get everything for just doing that. And they
Yeah.
don't have to worry about, paying $5,000 to a guru or something.
Right.
All the, they can do it at their own schedule. Trying to keep most of those, like when talking about the loan document and stuff, trying to keep them around 10 minutes where people can watch it for 10 minutes and do it at their own time. And that way they don't have to commit to a class. And then, because you remember we almost had, people that couldn't make it one night. And then I got, it gets pretty tiring at the end of at the end of that 3 months, I was like burned.
I bet you were. That was a lot of work.
No, everybody's doing good for the class. I mean, Helena's still in Australia doing her thing down there.
Yeah.
I think we have the first private money broker in Australia.
Wow.
And she has,
I see her quite a bit online. Yeah.
she has her, she operates in the United States. She has they set her up, the company in Wyoming set her up, and she has, so she can do business here.
Right.
That's cool. So,
All right, guys. Well, I'm going to have to sign off, but
right.
I'll try to get all of you this evening, Robert.
Okay. That sounds good.
all right, guys.
All right, we'll catch you guys later.
All right.
Bye.
All right.